joining us this morning with her callers, Piper's Corinne Wolfmeyer. Talk more about, I guess, first, Corinne, this bounce off of 400. You think there's more to go?
Yeah, absolutely. I mean, this is an investment year for Ulta. They're investing in marketing. They're investing in their distribution. They're investing in their workforce. They're investing in their stores. I mean, we're going to see some really great growth from these investments, but also, I mean, the broader beauty category continues to crush it. And Ulta is well positioned, whether we're in a strong market or kind of a weaker economic environment. They have a product assortment that spans across prestige and mass. You're hitting all price points. They're also in Target. They're growing their unit store base. I mean, it is really an impressive growth story, but also we're going to get some really good margins out of this too.
Can you talk a bit about share shift and what's happening to Ulta versus, say, EL at the moment?
Yeah. So Ulta, I mean, it's really this strong innovation we're seeing in the mass category. I mean, you've got brands like e.l.f. that are rapidly innovating, and Ulta carries e.l.f., and it's seeing really good demand for brands like this that are having this kind of heavy innovation, heavy uptake, partially driven by social media and Gen Z as well. So we're seeing a lot of innovation in this mass category. Ulta offering this allows it to capture share from other retailers that maybe only serve the prestige category.
Isn't the concern with Ulta that, and you know this more than I do, that it's had such a strong streak of growth already, and that when you look in the future, that might be hard to maintain, especially if the consumer weakens and the labor market weakens?
Yeah, I mean, it's definitely a concern. I mean, prior to COVID, they were growing 100 stores a year, and now they're averaging about 50 stores a year. And it is one of the biggest investor questions is how is Ulta able to continue to grow above the market if unit growth is slowing, if we're in a pressured macro environment. And it really comes down to their strong loyalty membership base. I mean, their loyalty members make up about 95% of all sales. And they are not only deepening penetration within their existing loyalty members, but they're adding additional loyalty members via the Target partnership, via new brands they're bringing in that are attracting new guests. But also what we've learned recently is they've been able to reactivate several lost guests. So maybe a guest that they lost during the pandemic, their Target partnership and then bringing in more brands into the stores has allowed them to reactivate those lost customers and bring them back into the platform. So really, it's going to come down to this really rapidly growing membership base.
Finally, I mean, I guess, would you call it a stretch to get to new highs? And if not, how do they do that? How do they get back there tactically?
Yeah, I mean, I don't think it's a stretch. I mean, the top line is definitely going to slow a little bit. We are going to see a little bit of margin pressure from these investments initially. And, we've got other supply chain, headwinds, and freight is a little bit more expensive. You also have shrink. So definitely some margin pressures we need to be cognizant of. That said, in this environment where we are kind of in this kind of looming recessionary environment, we want to look for names that are well positioned and well hedged, and that is Ulta Beauty. And then as we think about the longer term, those investments they're making in supply chain and revamping their stores, we are going to start to see those benefits start to come in the coming years and really take Ulta to new highs.